guys, again, it's weekend this time, and I'm going to have 3 recordings today and 3 recordings tomorrow, trying to look at the majors. And this analysis are, let's say, medium to long-term analysis, whereas the analysis during the week are short-term analysis, how to benefit from small swings in the market. However, regarding this weekly or daily chart or even monthly chart analysis, I will try to look at the big picture, and if price, for example, travels for and meets some important resistance or support area, like it's the case for this Australian dollar, US dollar weekly chart, then I would like to show it to you and to interpret it, to see what it means. Now, if you look at this is a weekly chart on the Australian dollar, US dollar, and as you see, as you look at this structure here, is extremely interesting to note that this 1, 2, so this is the third red candle to the downside, being quite punished. Let's say the pair being quite punished after the Royal Bank of Australia last meeting, and when they just slashed the rates on the pair, on the Australian dollar, sorry. And even though the rates are, let's say, one of the biggest between the developed nations, still the pair has been punished from that moment on. Chinese data didn't actually help the pair, as the PMIs in China, especially PMI manufacturing, was coming below the 50 line, and all the 50 line meaning expansion or contraction of an economy. So it was 49 something, not well below 50, but nevertheless it was a print below 50, and that just added to the sell-off in the Australian dollar, US dollar. Why? Because China is one of the most important partners in economic relations with Australia. 1/3 of Australian exports go to China, and hence what's happening in China is influencing the Australian economy, and not only the Australian economy, but also the Australian dollar, US dollar. Now, in terms of technicals, if you look at this area, where are we now? So I would say that this and this one here, something like around 96, let's say, something like this. And let's take a shape and try to highlight this area like this. Now, I would say that this area that you are seeing in front of your eyes is an extremely important area in terms of market geometry and how price reacted when coming from the downside, for example. Okay, so price coming from the downside, then it is resistance once, okay, resistance twice, because here it's a false break, so resistance twice, strongly rejected from this area, and then all this move to the upside basically met no resistance until this area was being touched again. So resistance for the 3rd time, resistance for the 4th time, only to be pierced and broken to the upside. After this area was broken, look at it as a whole, okay, not as the upper and lower trend lines. Look at it as a whole. So after it has been broken, it has been retested once, almost here, 2 times, okay, 3 times, only to be tested again for the 4th time. So I would say that while we had here 4 levels of resistance, so 1 here, 2, 3, 4, so it has been tested for 4 times to the upside, so this was resistance. So 4 more area of resistance. Once broken, it becomes support, and as you can see, after it has been broken to the upside, now we're having first time here it becomes support, second time, third time, and like a charm, this is a fourth time that this area is proving to be a support. Now before moving forward, all eyes were on this potential contracting triangle because it looked like a contracting triangle, even though I have my let's say, even though I have my doubts because the proportion, the Fibonacci proportions between the leg of the triangles are not that well defined on this structure, but nevertheless, even the fact that the US dollar Canadian dollar, which is inverse correlated with AUD, is also consolidating in a contracting triangle, so this might be a contracting triangle. So everybody in this world was looking at this structure like this, okay, and saying that this is a contracting triangle with A, B, C, D, E, and bound to break higher. Well, contracting triangles can be out of two. Let's say, can have two meanings. They can be either continuation patterns, when price coming from the downside consolidates in a contracting triangle and breaks into the same direction it enters, so the direction is up, or they can be reversal pattern, when price coming from the downside consolidates in a contracting triangle and then breaks to the downside. Now in this case, they point usually to a major move to the downside. So more weakness, and the previous lows are meant to be broken. Now previous lows are this area here, these lows here. So if this contracting triangle proves to be a reversal pattern, so we should move to the downside from here, then those lows in this area, so those lows in this area, point A, are going to be inside. However, I have my doubts. Why? First of all, because of this highlighted area here. In order to move to the downside, you need to clear this area. So until this area is going to be cleared, I'm not going to look on the short side. Even for the legs of the triangle here, if you look at them, all the moves to the downside were sharp sell-offs. Look at here. So this is a sharp sell-off only to be retraced, and a sharp sell-off only to be retraced. A sharp sell-off again, 4 weeks only to be retraced. 3 weeks only to be retraced. Now this looks no different with a sharp sell-off to the downside. The previous lows, these lows and these lows, are not going to be taken yet. And the most important low to be broken to the downside is this 93.89. So until 93.89 is cleared, I would stay on not stay on the long side, but I would stay besides the short side. I would still look for the pair to bounce. Now, in order to what I said earlier, if this is a contracting triangle as a continuation pattern, then this should be counted. This should be counted like this, with this being an A wave. Sorry. A and the B. And C and D, and E, so A, B, C, D, E, and then to move to the upside. But, okay, there is a but here. If in this scenario, this is a continuation triangle that should go to the upside, so the main condition is those lows, this area not to be broken. But if it is the other way around, I mean price coming from the downside and makes this triangle as a reversal pattern, then this should be labeled at A, and this should be labeled at B, and this should be labeled at C, and then here would be the D, and here would be in the other way around here, and here would be the E, and there you go, you have the end of a contracting triangle. And in this case with A, B, C, D, E, then that would mean that this is an X wave, okay? So this would mean that this is an X wave, and all this structure here was another A, B, C, X and then A, B, C, D, E. This is the second scenario that might be for this contracting triangle, but yet again this area needs to be broken. And there is yet again a third scenario for this triangle, and this would be, I don't know, more likely from my taste, is that this contracting triangle actually begins only here. Okay, and this is a little bit tricky for the normal retailer, but it's very much valid. So to begin only there, and this to be the contracting triangle, like this. So to have a first leg to the downside, either an A, then a B consolidating in a contracting triangle, and then looking for a C that should have the same length as this wave, but this would be the object of a different analysis and different recording. For the time being, let's try to say that this here is the upper trend line. So if we bounce out of this area from here, then this would be the upper trend line to be broken to the upside. Now, going into next week, all eyes are going to be on the 0.96 level, and then if we break to the downside in the coming weeks, try to focus on this 93, 94, as this area, 4-time resistance, 4-time support, normally should prove its power. So until next time, stay safe on the markets.